Good evening, all. This is Shay Horowitz, ShogunTrading.com. Hope you had a great weekend. This is our free weekly newsletter where we talk about market conditions and what to expect for the next week, basically. I want to start off with a chart of the NDX on a 30-minute basis, and the reason why I want to show you what happened last week. Last week is basically 12-10, 12-14. Market started out the week very cautious, very cautious, because FOMC was supposed to come out with their announcement on Tuesday. Of course, everybody's nervous, everybody's conservative, nobody wants to take on a position, and that's why you see the market really not moving. As soon as it came out with the announcement, the announcement was really pathetic, and the market free fell. Went into a free fall. The announcement was not what people were expecting. They were way too hawkish. And, they didn't talk about the growth. They talked about inflation again. The market didn't like that and free fell. Now, on Wednesday morning, they came out and they said, we're going to fight, we're going to support growth in other ways, which is basically their way of trapping people. And this may sound like a conspiracy theory, but we see that quite a bit. They don't want people to go short. They don't want people to sell. So they can basically give a bad announcement and then surprise us with a good announcement the next day. And it happened many times over the last 6 months where they would come out and inject liquidity into the market, great liquidity into the market whenever the market was free falling, basically making it very dangerous for people to short. Because at any point in time, the Fed can come in, they can step in, support the market goes up, and you lose money on your shorts. And I think that was their purpose. So that was quite obvious. But you can only manipulate the market for so long, and this is market manipulation. The market was diving based on rate drop that wasn't the comments weren't good enough, and then they manipulated the market go up, and the market came back down. It came back down quite quickly. Now, the market is different right now. Usually we have a market that's based on news, based on investments, based on development, based on new drugs, new technology, companies growing, companies coming apart, and so on. The market right now is only based on the Feds. They want to see if we're going to go into recession or not. Is the Fed going to support growth or not? Is the housing market going to collapse our economy? Or swing our economy into recession or not? That's what really the market is focused on 100%. And that's why you see all the indexes, the NASDAQ index, the Dow Jones Industrial, the S&P 500, all of them basically moving in step. There is no separation in them because the market is just looking for, you see this is the S&P 500, for example, Dow Jones Industrial Average. And basically I'm switching between indexes right now, and you see that the chart is not really changing. It's exactly the same chart. The market, everybody's buying and selling stocks right now just based on the Fed. Very weird market. It's not normal. There's no normal trends. There's no buying and selling. There's no waves. There's no consolidations. There's none of that, which makes it very difficult to trade. Oh, absolutely. Now, we're also going into a holiday week this week. We have Christmas next Tuesday. Monday is going to be a half day. Tuesday, of course, the market is closed. Friday is going to be absolutely pathetic because everybody's going to be traveling, everybody's going to be shopping, everybody's going to be making their final preparations for Christmas. Thursday, of course, is going to be slow as well. We have Monday, Tuesday, Wednesday, and a little bit of Thursday that I think is going to be pretty good trading this week. Now, we have, of course, a bunch of economic news that's supposed to come out this week, but I don't think that any of it is going to be as important as listening to the Fed and seeing what they're going to do to boost up our economy at this point. Let me go into daily charts real quick, and then I have a little speech about trade management. You can see that we don't really have a trend or anywhere close to it. We don't have a pattern. We don't have lower highs, higher lows. All we have right now is just a mess. And you have to change your trading. You have to change your trading when the market goes into a mess mode. When the market is going straight up, buy. When the market is going straight down, sell. One of the tricks of trading when the market was in the heydays, in the late 90s, is that everybody was buying, and if the stock pulled it against you, you buy some more because the market's going up. It's pretty easy. But when the market is going back and forth, the market is very, very choppy. You really have to watch your trading rules. Obey your rules. Don't get caught up in emotional trading. Emotional trading, when you try to seek revenge, or you're trying to get your money back, or anything along those lines, is going to get you beat up at this point. Don't second guess your trading rules at this point. Keep them tight. That means break-even stops. That means taking profits at 2%, taking profits at 4% profit, moving your stops to break even, keeping your stops tighter and tighter and tighter as you go. Don't ever add to a losing position. Ever add to a losing position. Make sure that you water your flowers and you pull your weeds. Make sure that stocks that are not moving your way, stocks that are not absolutely flying your way, you don't get into. You come out of. If the stock is really, really moving your way, capitalize on it and maximize it. Those have to be your trading rules when the market is choppy. You want to make sure that you capture profits. You want to make sure that you maximize your profits, and you really want to make sure that you're not nursing. You're not giving psychological treatments to stocks that are not moving right now. And you'll see quite a few stocks that are just absolutely blah, absolutely not moving at all. But then you also have to find the stocks that have plenty of momentum in them, and those do exist and they do work quite well. That's going to be the trick to trading this week. No stock picks, of course. No stock picks going into this week because the market is not in a trend, and we always want to be in a trend when we pick stocks. We want to work with the market. Remember, the market is 60% of your trade. Market accounts for 60% of the strength behind your trade. The sector is 25%, and the stock itself is only 15%. Since we don't have the market element right now, the best trade is to stay on the sideline. The best trade right now is to be in cash. You want to wait for probably next year before you take on any long-term trades. Now, we're doing very, very well on a short-term basis. Here's an example: KCI that we shorted 58.63 and went all the way down to 47. That's okay. Those type of trades are okay. But you don't want to carry any more than that. We do a lot of these. For example, NDAQ buy at 45.02 went all the way up to 48. 2 days, 3 days, 2%, 4% trades that work extremely well. Celgene that we had and we shorted over here and did very well on. CCRT that we did very well on the short from 11.50 down to 9.25. 2-3 day moves, really quick, capture your profits, move on. Momentum is extremely important right now. Anyway, enjoy this week. I'll release another one on Sunday, another newsletter on Sunday, right before the Christmas, and we'll probably talk about the next year at that point. Anyway, have a great week. I'll talk to you next Sunday. Take care.